Warren Buffett. The name alone screams investing legend. This guy's not just rich, he's bought an island and named it after himself rich. He's the Oracle of Omaha, the master of the buy and hold, the king of value investing. Buffett's been crushing the market for decades, proving you don't need a fancy algorithm or a Wall Street suit to make serious dough. He's all about finding solid companies with long-term potential and sticking with them through thick and thin. Think of him as the investing world's marathon runner, not a sprinter. So naturally, I figured, why not try to emulate the guy? If it works for Buffett, maybe, just maybe, it could work for a regular Joe like me.
Buffett's investment philosophy is surprisingly simple. He's all about finding undervalued companies with strong fundamentals. He looks for businesses he understands, with a competitive edge, and a management team he trusts.
His famous saying, "Be fearful when others are greedy, and greedy when others are fearful," perfectly sums up his contrarian approach.
He's not afraid to zig when everyone else zags, buying when the market dips and others are panicking. Now, I'm not saying I understand the intricacies of every business out there. I'm a TV guy, not a financial analyst. But Buffett's core principles, those I can get behind.
Armed with Buffett's wisdom and a healthy dose of skepticism from my financial advisor, I set out to build my own mini Berkshire Hathaway portfolio. I knew it wouldn't be easy, but I was determined to give it my best shot. After all, who wouldn't want to emulate one of the greatest investors of all time? I focused on companies with a strong track record, a clear competitive advantage, and a brand I knew and loved. These were the companies that had weathered storms and come out stronger, the ones that had a loyal customer base and a product or service that stood out in the market. My picks, a mix of blue-chip stalwarts and a few under-the-radar gems I thought had potential. The blue chips were my safety net, the reliable performers that would provide stability. The hidden gems were my wild cards, the ones that could potentially offer high returns if they played out as I hoped. I diversified across different sectors, just like the Oracle himself would. Technology, healthcare, consumer goods, you name it. I wanted to spread my risk and not put all my eggs in one basket. Diversification was key to managing risk and maximizing potential returns. Was I nervous? Sure. But hey, no risk, no reward, right? Investing is all about balancing fear and greed, and I was ready to take calculated risks. I knew there would be ups and downs, but I was in it for the long haul.
Are you sure about this? I mean, it sounds good in theory, but the market can be pretty unpredictable. There are so many factors that can affect stock prices, from economic indicators to geopolitical events. It's a lot to keep track of. What if things don't go as planned? What if the market takes a downturn or one of your picks doesn't perform as expected? It's a lot of pressure to handle.
Yeah, I get it. But you know, if Buffett can do it, why can't I? He started with nothing and built an empire. I'm not saying I'll become the next Warren Buffett, but I believe in my strategy and my ability to learn and adapt. Besides, I've done my homework and I'm willing to take the chance. I've read countless books, analyzed numerous reports, and sought advice from experts. I'm not going into this blindly. I'm prepared and I'm ready to make it rain. Hopefully. The first month was exhilarating. The market was on an upswing, and my portfolio rode the wave. My carefully chosen stocks were in the green, and I was feeling like a Wall Street whiz kid. I even caught myself daydreaming about early retirement and sipping Mai Tais on a beach somewhere. This Buffett thing is easy, I thought. Little did I know the market had other plans.
And so, the journey begins. With high hopes and a portfolio inspired by the Oracle of Omaha, our young investor steps into the world of high-stakes investing. But as we'll see, the market has a way of keeping things interesting. Section 5. Month 3. A bump in the road. Did I buy high and sell low? This is a question that haunts many investors, especially when the market takes an unexpected turn.
Then came the inevitable market correction. It was like a storm that no one saw coming, but everyone feared. Remember that "be fearful when others are greedy" thing? It's a classic piece of advice from Warren Buffett, but in the heat of the moment, it's easy to forget. Yeah, well, I kind of forgot about that. The excitement of the bull market had clouded my judgment. As my portfolio dipped into the red, I started to sweat. Doubts crept in. Every negative trend felt like a personal failure. Was I in over my head? The fear of losing everything I had invested was paralyzing. Had I made a colossal mistake? The regret was overwhelming, and I questioned every decision I had made. Maybe I should just cut my losses and invest in something safer, like government bonds or my kids' college fund. The allure of stability was tempting.
But then I remembered another Buffett gem. Investing is a long game. It's not about the short-term gains or losses, but the overall journey. Panic selling was not the answer. It was a test of my resolve and my belief in the investments I had made.
I decided to hold tight and weather the storm. It was a difficult decision, but I knew that patience and perseverance were key to long-term success.
Section 6, Month 6, Patience, Young Padawan, Rome wasn't built in a day.
The next few months were a roller coaster. The market was volatile, swinging up and down like a pendulum on steroids. My portfolio followed suit, leaving me both thrilled and terrified. I learned the true meaning of buy and hold. It's easy to preach patience when your investments are soaring. It's a whole different ballgame when you're staring at a sea of red on your brokerage account. But I stuck to my guns. I reminded myself that short-term fluctuations were just noise. I was in it for the long haul, just like Buffett.
Section 7, Month 9, The Thrill of Small Victories. We're not losing money, we're making investors.
As the year progressed, things started to look up. The market stabilized and my portfolio began to recover. Some of my picks even surpassed my initial investment. I won't lie, it felt good to be back in the black. I celebrated with a steak dinner. Hey, I'm a simple man. More importantly, I learned the importance of tuning out the noise and focusing on the fundamentals.
We're not losing money, we're making investors.
1 year later, the experiment was over. It was time to assess the damage, or hopefully the gains. Had I managed to channel my inner Buffett and beat the market? The results were in. My portfolio had grown, but not by a staggering amount. It wasn't the life-changing return I'd secretly hoped for, but it was a respectable gain nonetheless. So, what did I learn from my year of following Buffett's investment strategy? A lot, as it turns out. First and foremost, investing is not a get-rich-quick scheme. It takes patience, discipline, and a strong stomach for volatility. Second, diversification is key. Don't put all your eggs in one basket, no matter how promising it seems. And finally, sometimes the best thing to do is nothing. Resist the urge to panic sell when the market dips. Remember, you're investing in companies, not stock tickers.
Absolutely, those are some crucial lessons. It's a journey of learning and adapting, not just about making quick profits.
Would Warren Buffett be impressed with my modest gains? Probably not. He's forgotten more about investing than I'll ever know. But I don't think he'd be completely disappointed either. After all, I followed his core principles. I invested in companies I understood, I held on to my investments for the long term, and I didn't let my emotions get the best of me. Well, not too often anyway.
The stock market is designed to transfer money from the active to the patient. Warren Buffett.
No, I didn't become a billionaire. In fact, I didn't even come close to that lofty goal. But that wasn't really the point, was it? The journey was never about the destination of immense wealth. The real goal was to learn from one of the greatest investors of all time, Warren Buffett, and apply his principles to my own portfolio. It was about understanding his strategies, his mindset, and his patience. And you know what? I did just that. I gained valuable experience, insights that no book or course could ever teach. I learned to control my emotions, which is crucial in the volatile world of investing. Staying calm and collected can make all the difference. And I made a little bit of money along the way. It wasn't a fortune, but it was a start, a foundation to build upon. Not a bad year's work, if I do say so myself. The satisfaction of seeing my efforts pay off, even in small increments, was incredibly rewarding. Now, if you'll excuse me, it's time to take a well-deserved break. I have a beach to get to. The sun, the sand, and the sea are calling my name. Those Mai Tais aren't going to drink themselves. It's time to relax and reflect on the journey.
And with that, our journey comes to an end. The market will continue to ebb and flow, but the lessons learned will last a lifetime. Cheers to wise investing. Here's to the future and to the endless possibilities that lie ahead. May we all find success in our own unique ways.